Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. The overall macro continues to suggest a typical stagflation theme of trading ranges. Joining us to discuss is Mish Schneider, Director of Trading Education over at MarketGauge. Mish, it is great to see you as always. Welcome back to Trade Talks.
Thank you, Jill. Great to be back as always.
All right, let's take a look at some of the ranges that you are watching in certain areas of the market as you think stagflation looks like it's poking its head here.
Well, it's been more than poking its head. I think it's full on sticking its head all out with a big smile on its face and somewhat of a sardonic grin at that, because we can see what's happening here with really, if you're looking at the bond market, the warnings that it's been flashing besides the yield curve, the rising interest rates. You also have the high yield, high debt grade bonds, which is the junk bonds, selling off. And even through this whole rally that we've had starting really a week and a half ago, has been really a rally into resistance, and the junk bonds didn't really cooperate the way they would have if this was truly going back to a risk-on environment, as so many people have been thinking.
And Mish, let's take a look at some of the areas of the market that I know you focus on. One of them being transportation. These are a lot of the sectors that fall in line with inflation, supply chain, what's happening in the commodity space. And we'll get to commodities in a bit. But what are you seeing with transportation?
Well, it actually is, of the sectors that we like to watch, or what I call my economic modern family, the strongest right now. We have the regional banks doing okay. They're holding up because of the rates, but I think they ultimately could be more vulnerable. The transportation is doing well because even in spite of everything that's going on, we do have a situation where COVID is waning and people do want to get out. In spite of the rising gas prices, in spite of the rising airline fees, people are getting out and wanting to finally do things after 2 years of being home and being tired of it. And it's also reflecting a little bit more demand just of goods, right? Because they're not so plentiful and people are kind of still in that hoarding mentality in terms of what they need.
And what about oil, energy, food commodities, natural gas? We know the commodity space has really performed well. Have we passed that peak yet, though?
Well, there was some good news this morning, and that's why the oil looked like it was coming in lower and was maybe peaking out, because they're still trying to get themselves off the dependency of the Russian oil. When I say they, I mean the European Union. But clearly, that's still maybe pie in the sky, because then oil went ahead and rebounded as the equity market started to sell off, where also not only do we have oil going up, but natural gas and the energy prices. And then on top of that, you have the food prices going back up again today with soybeans, corn, wheat. And this is just exactly what we have anticipated. The knee-jerk sell-offs that people think, oh, inflation has peaked, have been nothing more than knee-jerks. We're still in a really serious situation. And even if the war ended, say, tomorrow, Ukraine has a lot of now infrastructure issues it's going to have to deal with in order to get back to really being the exporting nation of goods that it's been for years. And that's on top of the situations we have here. You know, we still haven't really opened up the pipeline in terms of getting more of our own reserves. So what we have left is limited. Inventories in oil were down. I mean, all of this really is still spelling trouble for the markets, on top of the Federal Reserve now finally saying, oh yeah, maybe there's inflation. So yeah, it's kind of a perfect storm right here.
And Mish, I also know that you are paying attention to the FXE. What does this mean in relation to the dollar? I mean, are we at risk of losing our dominance in the global petroleum marketplace here?
Well, this is not something new. This conversation of losing the world's reserve currency status has gone on before, as China has threatened to go into working with Saudi Arabia to price petrol in yuan. India on board with that. Obviously, Russia would be on board with that as well. So, and they are still allies. I mean, they have not necessarily turned their backs on Russia, although they have said outwardly that they have, but clearly behind the scenes they're working. So there's that situation. And then there's also just, you know, in terms of the geopolitics, a lot of talk about the fact that the way that the US has handled this with the SWIFT systems, that there's been a lot of workarounds around the sanctions with Russia. And that's one of the reasons why Bitcoin's gone up. And so there's a lot of risk to the dollar. And just look at technically, we're a little bit overbought. So I've been looking at the euro, particularly through FXE, because every time it gets on par with the dollar, it has a nice bounce. Now, we haven't really bounced yet, and this is very premature. But if things start to subside with the Russia-Ukraine situation, regardless of inflation and all the other problems, this talk of deglobalization that you're starting to hear, Jill, that could actually wind up being bullish for the euro, or at least for the FXE, or at least in relation to the dollar. We can start to see that relationship flip and FXE gets stronger while the dollar gets weaker.
And Mish, in the last minute here, let's talk about Bitcoin for a moment here. I mean, certainly has enjoyed quite the move as we get into this more risk-on frame of mind, as you had mentioned. We also had some, interesting news come out with Goldman clearing OTC trades, BlackRock starting to be more outwardly vocal about cryptocurrency. So there was some really interesting news that came out this week.
Yes, and so what we're really seeing, even with Powell, I mean, Powell is talking basically out of both sides, because first he says that, he still thinks crypto can be used for illicit purposes, which of course we know the dollar never has been. And so there's that. But at the same time, he is talking about the switch to digital currency. And on really a technical standpoint, let's just look at the technicals, what you really wanted to see. Now, of course, right now, Bitcoin went up with the market. And as the market started coming off today, so did Bitcoin. But we're still expecting this 40,000 level now to be the new support. We got right up close to the resistance of 46,000. And if we can get through there, I think we're really in good shape. And also cyclically, every time in the last 3 or 4 years, Bitcoin's made a new low, it's been a higher low, and it's been the launch pad for making new highs. So right now, we're still thinking that Bitcoin has a lot of upside potential, even if there's some chop in between.
All right, Mish, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you so much.